Hey folks, welcome to 9 to 5 to Freedom. So glad you could make it and watch today's video. Wanted to talk about these high yield dividend funds that I've invested. If you've seen my video from this week where I posted the funds I've invested in $12,000 and we're going to monitor how they perform. Well, today I wanted to dive in a little bit on a couple of these funds and see if they would survive a bear market or not. So that's something we're going to dive in today. So glad you can make it here. If you're new to this, my name is Alex and this is 9 to 5. We talk about my career choices, mistakes I've made, lessons learned, talk about investing in real estate, and most recently starting to look into investing in dividends to make my life a little bit more passive. Really focusing on building that nest egg in order to eventually leave that 9 to 5. So glad you can make it here. If you watch till the end of the video, I really appreciate a thumbs up. If you enjoy this, leave comments. I want to have a discussion. What do you think about this? Do you have your doubts? Are you doing something similar? Want to hear more? Okay, so let's start right into it, folks. The craziest, most recent funds everybody's talking about is yield max funds. There's lots of YouTubers, lots of folks who are talking about it. You have your individual yield max funds for individual stocks like Tesla and like Apple, Nvidia, Amazon, Facebook, Google, and you can see the distribution rates. I mean, these are crazy yields and everybody's hopping on this train. Now, if you look at these performances of these funds, you have to start seeing the bigger picture here. So we'll look at, pull this up on Yahoo here. So Tesla stock. Okay, Tesla versus Tesla. So if we look at Tesla ETF price. All right, so this fund's been around not very long. 2022, November 25th came out. Starting price of $40.88. And you can see that drop all the way to $13 and floating around 74 cents right now. So 66% erosion over the course of a couple of years here, right? So why are folks buying into this? Well, they're saying they're going to give you 121% distribution. So obviously a lot of that price erosion is from that high yield distribution. So you're getting that money back as you're losing the value of your stock. Now, question becomes, is this sustainable? What is this going to eventually go down to? Is this going to be a penny stock? Are they just going to shut this down? We don't know. But if you bought in, let's say, last year, okay, we bought in a year ago, January, let's say 12th, it was $20. Well, you would have lost, $6 off of each share over the course of 12 months. Okay, so not sure there. Now, my strategy, right, is I want to look for funds that I'm not going to worry about. I'm not. Who wants to gamble your life savings on things that are going to erode or shut down? I mean, if you have a huge nest egg, let's say you got a couple million, sure, throw in 25, 50 grand into this, get those high yields, you'll be fine. If you're not in that position, if you're starting out, you want to make sure that you are you're taking the risk to maximize that performance to get your most gains, but you also don't want to lose what you got, right? So one of the stocks that or one of the ETFs that's been around the block. I mean, you have your JEPI, JP Morgan stock price. Okay, so this is, let's see here. This has been around since 2020. Started out $50. We're up to $57 as of today. So as you can see, this has been around the block. It's been through the downturn. We're up to $63, and then 2022, that was a bit of a bear market. And as you can see, this came back up, and we're still in the green ever since the inception of this fund. So what's the dividend on JEPI, right? So JEPI, as of right now, is paying let's see, 10, 11% here. Looks like it's dropped to 7. Let's see, 7.39%. So I mean, that's honestly, that's not bad. But I wanted to see how all this compares. Why do all this stuff if you can just buy the S&P 500? Why not just buy the S&P 500? And if it performs better than these dividend stocks, right? So I plotted this on TradeView, and I want to see some of these ETFs and how they compare. You can see we got our YMAG right here. We have our YMAX right here. These are the yield max. These are the ones that are tracking multiple stocks there. We have VO, which is the S&P 500. We have JEPIQ, and we have JEPI. Okay? Right now, if we looking back to, let's see, what's the date here? Oh, they want me to upgrade. Not yet, folks. I'm not rich yet. Tuesday, January 2020. Okay, so we're looking back almost about a year, right? So if we look back 12-month frame, and this is with dividends turned on. So adjusting data for dividends. So this is you investing the money into these funds and whatever the growth is plus the dividend return. You can see JEPI didn't do so hot. Okay, we got 10%. JEPQ did 20%, and VOO did 21.38. You can see these are pretty close. If you track these performance-wise, they're hand in hand. I think JEPQ is a very interesting play. Okay, well, moving up here. YMAX. YMAX did better, 23%. YMAG blew it out of the water at 35%. Okay, now once you start adjusting, right, you start scrolling back. As we scroll our wheel back, we're moving back in time. Now you can start seeing where some of these funds haven't been around yet. Okay, you got the YMAX funds. They were live just a year ago. Okay, we scroll back, and you can kind of see the order of these funds start to change. All right. All right, so let's forget the yield max fund. We'll take them out of this picture. We'll just look at JEPIQ and JEPI. We're gonna go back to May. Let's see how far back we can go. 2022. All right. Well, look at that. I really like this chart here. Okay, you can see JEPI hasn't done really hot. 34%, almost 35% gain since June of 2022. And you see that JEPIQ went hand in hand with VOO, and it actually outperformed by 4%. I mean, this is one of the, I think, more conservative funds. And I honestly, like, we'll gather the money out of these yield max as the sun is shining, so to say. We'll pull those dividends out of them, but long play, I see JEPIQ. I mean, historically, it's been tracking the S&P 500 and paying out those dividends. So I really like to see that. Let's see how far back we can go. You can see right here, JEPIQ started out in May of 2022. So it hasn't really given us as long of a performance run as JEPI, which has been around much longer. Now, if we look at JEPI all the way back to its inception, you can see JEPI did 55% as opposed to S&P 500 at 84%. So we see that, that's 30% loss. So I'm not really happy with the way JEPI's been doing. But JEPIQ, again, if we go back to its inception time, hand in hand, guys, and I mean slightly higher, obviously here as you can see. But I think I think there's a lot of opportunity here for JetBQ to survive during bear markets and not have that NAV erosion, not have the decrease in price as you're seeing in these yield max funds. Now let's just look at YMAX, for example. If we go back, started at 20, we're down to 16. YMAG did better. Okay, started at 20 down to 18. So we got 7.8% erosion there. All right. So right now we're at $56 a share. Okay, so it is paying again. Let's see, JPQ is paying 9.72% a year in dividends. Okay, so we'll just we'll do some quick math. How many shares are we gonna need? Okay, it paid $5.44 $5.44 per share. Okay, so let's say you want to live on $5,000 a month. Okay, $5,000 a month times 12, that's 60 grand. Divided by 544. Okay, you're gonna need roughly around 11,000 shares. Okay, so 55.98 times 11,000. You're looking at $615,000. Okay, I'll stop waffling here. JPQ, what are your thoughts? Do you think this is a good player? I think it's going to be a large part of my portfolio. I think it's one of the more safe plays overall compared to yield max. I do like the Roundhill ETFs as well as and also Cornerstone. So I'm going to do some videos on those and share my thoughts. I'm going to balance that out. But really, that's what I want to talk about today. So glad you're able to join and watch this video. I appreciate our new subscribers here on this channel. Again, we're just trying to grow this channel, trying to make it educational, and really trying to build a nice community where we can figure out a way how to leave that 9 to 5. Okay, so thanks for watching and have a great one, folks.